What's good, y'all? CBO Trades here, and have a pretty exciting video today. We're going to go over the trading model. So just to give a little context before we dive right into it, none of this is financial advice. Please trade at your own risk. This is for educational purposes only. So for context, the market drives in 4 stages of price: AMDX, otherwise known as PO3. So what does AMDX stand for? Accumulation, manipulation, distribution, and X is either continuation or reversal. So I put a graphic up here so it's a little bit easier to visualize one singular candle. So in the bullish candle, usually you open low and you close high, or open low, high close, so OLHC. So you have accumulation, you manipulate to create the bottom of the wick, and then you distribute to trade the body of the wick. Okay, trade the body of the candle, sorry, getting my words mixed up. So once again, I want to say it clearly: in a bullish candle, you open low, this is the wick, which is manipulation, and then you close high. So during the body is a distribution portion. Now it's going to be the opposite for the bearish candle. So you open high, accumulate, manipulate, distribute down, so that means you close low. Okay, I just think that was good, some good background to fully understand the macro and the context of how the candles are forming. All right, so my model is very simple. I shouldn't call it my model. I follow it, or I learned it from TTRADES and Garrett. They've been instrumental in helping me see this pattern repeat multiple times throughout the market. It's very profitable and super easy to understand, at least in my eyes. All right, so it's known as I don't know if you want to call it the fractal model, the expansion model, however you want to call it. In this case, I just like to say 3 candle sweep. Sometimes it's 2 candle pattern, but usually I only like to do 3 candles. So this is known as a fractal model. So you're gonna wait for a reversal candle to form. So in this case, it would be right here. I'm trying to help you visualize it. So you need to wait for the reversal candle to fully close, and a reversal candle is known as when you sweep. Let me make this a red line. Right, so when I'll make it yellow, or actually orange. So tight. Okay, so a reversal candle is when you sweep the candle to the left. So if it closes below, or if it reaches the bottom of candle 1, and then it closes back in range, that's known as a reversal candle. All right, so just think of it as stopping out. Everybody stop losses from candle 1, and then springing back up, and then closing back within range. So this is known as a reversal candle. Now the framework is, once the reversal candle is formed, you want to get in on side for candle 3, and you're anticipating that candle 3 is going to be an expansion candle. So an expansion candle is usually denoted by a small wick and a big body. All right, these are the most powerful candles in my opinion. I should say the easier candles to trade. And why it's so great is because if you follow the framework, all right, I kind of put in the if-then statement. So if reversal candle, which is right here, it's going to be known as candle 2 or C2, right? So the candle to the left of the reversal candle is candle 1. So if reversal candle C2, then enter candle 3. So this is candle 3 right here. And then once you enter on candle 3, put a stop loss on candle 2 low, target or take profit candle 1 high. All right, so it will look like this ideally. And then I put this this long function just to help you visualize how that works. And you're gonna see this model repeat many times. We're gonna dive into some examples. I'll go into NASDAQ, we can go to Bitcoin too, just to help you visualize it. So let's go into the first first one, let me go here. All right, so this is a good example. All right, so here's a swing low. All right, we don't sweep anything yet. This candle over here, candle 2, that is a valid reversal candle. Why? Because we breached candle 1's low and then we closed back within range and then we swept it. So what are we anticipating? We're anticipating an expansion candle and we should be targeting candle 1's high. So if I let it run, there you go. You get to candle 1's high and you TP, and you don't, whatever happens after your TP is none of our business. We just came here to make a couple points and then we're done for a day. Now, if you look to the left for some other examples, this to me wouldn't be a valid trade just because this is not closing within the range. So this is closing below this candle, but it's not closing above this wick. So this is not a valid candle 2, for me at least. Let's see if there's any more that we can follow. So this one's a good example too. So you can see it's very methodical or mechanical. So you have a sweep here, candle 1, candle 2, candle 3, and you would just be targeting candle 1's high. Now sometimes you can backtest it more or go deeper dive. If you have unprotected highs, it's going to go for those unprotected highs. So in this case, you could target candle 1 high, or you can target those unprotected highs, otherwise known as low resistance liquidity. But that's a different topic for another day. So you could target it here and you would make your profit and get out. All right, and then we'll just go over one more. You might not be able to see it. I don't think there's anything else actually. Yeah, I don't think I see any good ones. There's one here. There's one here. Yeah. All right. So I don't really see any other good examples on this daily. So we're just gonna go to our current example here. Let's go into a deep dive. So since this is on the daily, we're gonna go deeper into let's see, maybe the 1 hour chart. And then I'm gonna reverse. Actually, let's find some on the 4 hour. That might be helpful. All right, so I'm gonna take this off. Then I'm going to teach you another example of the framework on a different time frame. All right, so if I replay to, let's go right here. Okay, so again, it's very mechanical. What do you notice on this candle? We have a reversal signature. So go ahead and mark out your sweep, and then you want to mark out this as C1, C2. You're anticipating C3 to come, right? So if you're anticipating it, and then we're just gonna see what happens. So it would be something like this, and then we just target the candle 1 high. All right, let's see. Yeah. Now if we go back to this, so the way this framework would work again, right? So since we're on the 4 hour, we're gonna say, and every 4 hour candle is like 6, 10, 2. So 6 p.m., 10 p.m., 2 a.m. to 6 a.m. to 10 a.m. and so on. So in this case, we have a 2 a.m. reversal. So we can say if 2 a.m. reversal, 6 a.m. expansion / continuation. And it's the same thing. If 6 a.m. reversal, 10 a.m. expansion / continuation. All right, so this is the framework. And then we're gonna go, so now that you're wondering, all right, so if I see the 4 hour candle, how do we get on side in the trade? what you need to do is you need to go to a lower time frame and then find an entry function. All right. So before I do that, I'm just gonna add this indicator here. So this is called ICT High Time Frame Candles by Fadi. Thank you to Fadi for adding this. It's very helpful to visualize the high time frame candles. So in this case, I want to see just the 4 hour. So I'm gonna check this off. And then when you jump onto a lower time frame, it should populate. Yeah, there you go. So it's gonna show you the higher time frame candle. Now if I want to see, oops, that's not what I want to do. I only want to see 3 candles. All right, actually 4 is fine. 4 is fine. Okay, so now the next 4 hours is gonna form, and then once it does, you want to look for an entry function. So right now there's nothing to give me entry. And then just to explain, let me back up one more second. Where are we right now? One more. Okay, so just to explain, this entire, so the 6 a.m. candle is the 2 a.m. from 2 a.m. to 6 a.m., right? So it begins right here. Let me make it a little bit clearer for you. Yeah, so I'll make it, there you go. So this is a little bit easier to see. So you can see how the candle starts here, and then it kind of does all this noise, and all these candles make up this one 6 a.m. candle, or 2 a.m. candle, sorry, right? Because yeah, it's 2 a.m. reversal. So all this price action is forming a 1 4-hour candle. All right, so once it forms, it's done. Now we're inside the next 4-hour candle, and you want to ask yourself, how do we get on side? So how do we get on side? We're gonna look for an entry function, and then the most common one, or the best one that I use, is known as a change in state of delivery. So what is a change in state delivery? So the change in state delivery is when you have a series of swing highs and lows. So in this case, if we're in a downtrend, I want to make it a little bit like this. So you have a lower high, and then you have lower lows. And then you have a lower low here. And then once you have a higher high, all right, I'm putting it lowercase here. Oops. Then you have a higher low. And this is known as a CSD, change state delivery. All right, so you can just, otherwise it's also known as a shift, whatever you want to call it, it's up to you. But so lower low, lower high, lower low, lower high, lower low, break, higher high, higher low, and then you just ride it up. So in this case, the best way I can describe it is when you're turning a lower high into a higher low. It's basically a support resistance flip. So if I'm looking at this, right, if I'm gonna follow this model or this template, so you have something like this, and then I'm just gonna grab here. So, and also a swing, how you identify a swing point or a swing is known as a lower low or lower high. It's going to be any combination of a red and green candle. So there's a red candle here and a green candle, that's a swing, lower low. There's a green candle and then a red candle, that's a lower high, and then it's the same thing. So where would we break or start shifting? So your first signal of a shift is right here. Now, if I'm drawing the template, it's like this. All right, and then you would expect this is a higher high once it's closed, and then you're gonna see a wick form. Usually it's gonna turn the lower high into a higher low. All right, so I'm gonna make this blue just so it's easier to visualize. So right here, so you see the template above, lower low, lower high, lower low, lower high, lower low, break up, so higher high to the higher low. All right, and if we're remembering the AMD model, so just imagine this is accumulation. All right, so accumulation, oops, I don't know why it's, so this is accumulation, manipulation. Now you're gonna be in distribution. All right, so let's say, okay, I don't know why it's not deleting. So I'm gonna get rid of these drawings for now. I'll leave that there for now. All right, so once I see this candle, and then I also see that we swept this candle on a lower time frame. Once I see that, I'm gonna put a limit order. You can market order too. It's all based on your risk preference. And then I'm gonna put a safer stop would be all the way down here, but you can put it here. I would put it here just because it swept out this candle. Now, if it didn't sweep out, okay, then yeah, I would put it down here. And then what am I targeting? Let's see, this is the 4-hour candles. Yeah, it is. Okay, so your first target would be this candle 2 high, but usually we would go for candle 1 high. So let me get rid of this, just so you see. So it would be right here. This is candle 1 high. I'm gonna label it C1 high. You can also call it just objective or draw on liquidity. All right. And then let's see what happens. I'm gonna do it 101 speed. All right, so you get tagged in. All right, you would get tagged in here. Say you buy 1 contract. And then you're riding it up. Again, we want to take it to up there. So you get tagged in here. Your stop loss would be this lower low, and then TP would be up here. All right, so let's see what it does. Boom, and then there you go. So if you had taken that trade on futures, we'd make $1,300. All right, and then let's just break it down again. So again, higher high, higher low, and then if I take, once you see this being used, you start making more higher highs and higher lows, or these are called order blocks. So OBs, right? I don't know why it's white. It should be black. No, then text is not black for some reason. All right, so there you go. And then again, just remember the pattern. What do you notice? It's looking like this, right? That's essentially it. So now it's distributing, and then you have your target and you're done. So that's my model in a nutshell. We can go over some more examples. Let's just see what it looks like and keep playing it. Yeah, it looks like it just keeps going. Yeah, so it's pretty powerful. Let me just get rid of, dang, 47 drawings. I have 47 drawings. But again, I just wanted you to show you on a lower time frame how you would execute that, right? Because let's go back to narrative or the high time frame analysis. How do I get rid of? Okay. Right, so we are here. We are right here in this time. Again, I'm going to go over the stages of how I trade. So step one, look for high time frame reversal candle. So let's make this black just so it's easier. Okay, so there you go. This is the checklist, right? Step one, look for high time reversal candle. Okay, so I found one, 2 a.m. If it's 2 a.m. reversal, I'm going to expect a 6 a.m. expansion. So just like this. So I want to be in candle 3. All right, and then I'm going to see like C2. 2, go down to low time frame and find entry function. I'm gonna say that's the CSD. All right, so that's step 2. Find entry function. 3, set stop at C2 low or any protected low. Target C1 high. Okay, that's literally it, right? So when we go down to the 5 minute, we obviously have seen the same thing. There's nothing to take right now. We can't, so we gotta wait. Again, you don't see anything. Then boom, you get your CSD. You go long. Say you long. Oh, you longed here. Candle, it's down here. And then one thing I learned is that you let the wicks do the damage and you trade the body, right? So once you regain the 4-hour opening candle, right? So first we lost it, we created the wick low, we regained it. That's when you know it's gonna start expanding because it has to expand the body. So you could wait for it to be regained and then you could put your stop like this and then you let it run. And that's when the body's starting to expand. All right, and then if you miss the first CSD, you get a second entry, or you could ladder a second entry called, your second entry being the propulsion block or order block, and then you just target the candle 1 high, and then you're done. All right, so that was a lot of content to ingest. It's been 23 minutes. Let's go over a few more, and then I'll call it there. So let's see if there's any more on NASDAQ. Is there any good ones today? Or not today, but yeah, so here's a good one. So we can mark that out. All right. So this is again 1, 2, 3. And let's jump into the small time frame. So right here, this is what it looks like in real time. I mean, obviously it's replay, but you see that this is a reversal candle. Why? It's swept out, candle 1's low. You close back above, or in range, in this case above candle 1's low. So this is known as a reversal candle. So now you jump into a 5 minute, and then you would wait, right? So this is what it looks like. You wait, let it play, and then you just wait a little bit. So now you can either enter here. Right now, for me, I'm personally not taking anything off this just because there's no entry function, right? Because what do we notice? We have our high time frame candles. I'm not interested just yet into getting onside. Yeah, again, let the wicks do the damage. Okay, so now once I see this, I'm waiting for a change in state of delivery, right? So this ideally would be like right here. That's what I will look for. So it'd be like this, and then you can put stop here. This is only valid, the stop, once we reclaim this level or CSD above it. So let's see. All right. So right there is when I would get in. So let's say you buy. Okay, so now I'm gonna target candle one's high. So candle one's high is above here. So this wick. If you're more conservative, you can go for the candle two's high, and then there's also a wick here. But let's see what happens if we target above here. I want to put my stop at this candle 2 low, or in this case you can put at C3 low, assumed C3 low, right? Now let's play it. I'm gonna call this order block or CSD. Yeah, it should probably stall a little bit around here. Speed it up. And oh, do we not get to it? Yeah, I think we get to it. I guess it's taking a minute, huh? There you go. All right. So you see the strategy works. I'm gonna, how do I pause this? Okay, yeah, so I'm gonna pause it here. Again, the most textbook thing I can say is just a CSD, right? That's the most, that's at least for my favorite entry point. If you're a gap trader, you notice there's IFEG or a BPR right here. That's a pretty good confluence that we're gonna go higher. Just remember the market always hunts liquidity. So again, when we jump into that 4 hour, we wanna see, just think of it like if you're a market maker. Okay, so if I'm a market maker, oh wait, where's the thing? Oh no. Oh, okay, yeah, that makes sense. Right, so if I'm a market maker, and then I know retail, or I guess dumb money is, let's say dumb money is buying here, and they have their stop here. How would I make money? I would make money by stopping them out over here, and then they're gonna sell at a loss, and then they're probably gonna short, and I drive price back up, and then they have to cover. So that causes them to fuel a liquidity run back to candle one's high. That's just in the minds of a market maker. The whole thing is just very, they're just hunting liquidity, that's it. They're just running your stops every single time. Right, so let's look at on a bearish example. So this would be good right here, this candle, then we can wrap it up. Or I guess I did say we're gonna go over Bitcoin. So this would be a good example. So this is a 2 p.m. reversal. All right, so if I'm saying, let's say at this point in time, sweep. All right, I'm gonna make this red. Sweep, C1, C2, anticipating candle 3 to expand. So let me remember the order of delivery. So if, let's just say 2 p.m. reversal, then, is this 2 p.m.? Yeah, it's 2 p.m. 6 p.m. expansion. Okay, so now we have that. Let's go to a lower time frame. Wait, where are we? We have this. Oh, okay, yeah. So right here, looks like we're already dumping pretty hard. Let's just do it at one speed. Yeah, so I would say this is probably gonna retest above, and then it's gonna dump, because you need to form the wick high. All right. Now there's no entry function for me yet. I don't see anything that I would take. Dang, does it actually sweep out? I don't think it does. Okay, so yeah, nothing yet. Okay, yes, here. All right. I'm gonna back it up because that was too fast. And this is so let's just draw the little polygon tool. So you have your uptrend, right? Here, bang. And then once you displace, you're gonna retest and you fall down. Actually, I don't know if you retest it, but you have your higher high, higher low, higher high, higher low, higher high, higher low, higher high, break or CSD, lower low, lower high. All right, so then I probably would have missed this trade just because I would be limit ordering this retest, which we don't get. I don't think we get it. Yeah, so you would miss it, or I would miss it. All right, let me pause real quick. Again, and then you would just TP right here. That's where liquidity is drawing to. All right, so hopefully that makes sense. I'm gonna get drinks. I've been talking for a little bit. But yeah, that's the model in a nutshell. It's really good. So if I come to BTC, all right, let me exit out here. All right, so BTC, what do you notice on the monthly? I'm gonna delete this. Let's not use the monthly. It's kind of a hard take. I don't really see anything on a weekly we could take either. I mean, you could say that. You could say right here. You also could say right here, but then you see it failed because you swept back down, right? Because this would be 1, 2, 3. Then you come back down. You could say this one is valid because you reach candle 1's high. All right. Yeah, there's nothing on a weekly that I like. Let's go to the daily. Dang, I thought I would find a good example. Hopefully it's still the case. Still waiting for it. All right. Yeah, I don't see. Damn, is that? Okay, yeah. So this would be a good one. Yeah, there's always going to be. So right here, right? So you have your. So in this case, we're on the daily. I'm going to make it so that it's. So in this case, I'm going to say day. And then I come to here, right? And then remember the thing I said, it's market moves in 3 phases of price, or four phases, right? So you have accumulation, then you have manipulation, you have distribution, right? And then, so if I exit this out, that's basically the same, it's AMDX, power 3. Let me go back to the strategy though. Just want to show that little tidbit. So yeah, so this candle, you can see that we're sweeping, and then it's kind of it's barely a reversal candle, but because you swept a high time frame PD array, I shouldn't say those terms, it might be too complex, but you see how it swept range lows, let me say that. So you have confidence that this is going to be a good following or a good candle follow up on. good candle to follow up on, right? So if I go to, now I can go to, if we're on a daily, we can just go to 1 hour. All right, now you already have a good entry function right here, but again, we trade candle 3, or I trade candle 3. So I'm gonna let this play out. Okay, is there an entry function I could take? Not yet. If I mean, I would really like it if I can get here. I don't know if I do. So if you're aggressive, then you can just take, you can take entry right there and then put stop at candle 2 low, and then you want to target candle 1's high. So it would be up here. But in this case, this is another high. But let's just see. Me personally, I'm waiting for down here. I don't know if it comes down or not. Okay, yeah, so it looks like, yeah, it looks like it, oh, it does. All right, so price rebalanced. So let's say you got in here, and then you enter, I don't know, let's just say you buy 6 because you're rich. If you miss this entry, then you can enter again off here. All right, I'm gonna take it and see. All right, so once you close above, again, if you miss this entry, you can enter again right here. So let's say you did buy, and now I want to take profit above these. Just let it play out. All right. So hopefully you guys learned something today. I'm going to do a follow-up video just for, I guess, cryptos I like in the quarterly time frame, because I think we're going to have a pretty big run. But this is a lot of content. I'm going to try to add some timestamps just so it's easier to go to the sections. I know I kind of rambled a lot, but I think this strategy alone has helped me refine my trading a lot. Just for context, I was a Elliott Wave trader. I wish I never learned that garbage, because this is the best way to form analysis and executions, in my opinion. So hopefully you guys enjoyed. If you did, please leave a comment, like, and subscribe. Peace.